Special Report 2024, The Nigeria Banks and Their Many Thieving Deductions. Part 1. There is a common saying in Benin City, Nigeria that goes, "Who no go, no know how far." In English, this loosely translates to mean, "It is only a well-traveled person that knows better," or "Experience is the best teacher." It is on this premise we start with the United Kingdom, as we bring to you sounds and pictures of the once financial capital of the world. What those in the UK call the London Financial District, we dissect the banking industry in Nigeria, and we draw conclusions as to why we have decided to title this Special Report 2024, The Nigeria Banks and Their Many Thieving Deductions. So let's start from the basics. What is banking all about, and how do banks make their money? Banking is a financial industry that involves the business of accepting and safeguarding deposits, providing loans, and offering a wide range of financial services to individuals, businesses, and other entities. It is important to state here that banks play a crucial role in any country's economy by facilitating the flow of money and credit. They serve as intermediaries between depositors who have surplus funds and borrowers who need capital for various purposes. With the long intro on banking out of the way, let us now look at the ways banks make their monies. 1. Interest income. One of the primary ways banks generate revenue is by charging interest on loans they provide. Banks lend out the deposits they receive from customers, and in return, they earn interests on the loans they extend. This interest income is a significant source of revenue for banks. 2. Interest on deposits. Banks pay a lower interest rate to depositors on their savings and checking accounts compared to the interest they charge on loans. The difference between the interest paid to depositors and the interest earned on loans is known as the net interest margin, and this represents a substantial portion of a bank's income. Investments. Banks invest in various financial instruments, including government and corporate bonds, stocks, and other securities. They earn income from the returns on these investments. 4. Mortgage servicing. Banks that offer mortgage loans often earn fees by servicing those loans. This includes collecting mortgage payments, managing escrow accounts, and providing customer service to mortgage borrowers. 5. Asset management. Some banks offer asset management and wealth management services, where they charge fees for managing investment portfolios on behalf of clients. 6. Trading and investment banking. Larger banks engage in trading activities in financial markets, where they buy and sell financial instruments to profit from price fluctuations. Investment banks also generate income through mergers and acquisitions, advisory, underwriting services, and assisting companies with capital raising. 7. Credit card operations. Banks that issue credit cards generate income from interest charges on outstanding credit card balances, as well as fees associated with card usage. 8. Treasury services. Banks provide treasury and cash management services to businesses, helping them manage their cash flows and optimize their working capital. They may charge fees for these services. 9. Foreign exchange. Banks participate in the foreign exchange market and earn revenue from currency trading, as well as from providing foreign exchange services to customers. 10. Financial services. Banks may offer insurance, asset custody, and other financial services that generate additional income. And so to the last but not the least, 11. Fees and charges. What Nigerians would normally call bank taxes. Banks charge various fees and service charges to customers for services such as account maintenance, overdrafts, wire funds transfers, ATM usage, and foreign currency exchange. These fees contribute to a significant portion of a bank's income. There's a reason we at Newspedal had the bank taxes as the last entry in our list of how banks make their monies. These bank taxes, charged to customers for having funds or interbank funds transfer, are the focus points in this special report. To be clear, in the course of producing this report, we were unable to find any Nigeria bank that charged fees for intrabank funds transfer. That is the first good news we have for you in this report. What constitutes an ethical, or should we say a reasonable, fee for interbank funds transfer? Or should we exempt the Nigeria banking sector from ethical considerations and assume the worst? Or perhaps we should leave it to the Nigeria market forces to decide. Or just maybe there is a need to come together and create a system that facilitates a seamless banking experience for the banks and their customers. And so we go back in time. In 1993 to be exact, a group consisting of the Central Bank of Nigeria, CBN, and all commercial banks in Nigeria established the Nigeria Interbank Settlement System, NIBSS. NIBSS serves as the central infrastructure for the automated processing, settlement, and management of interbank transfers, clearing, and settlement in Nigeria. In simple terms, the Nigeria Interbank Settlement System, NIBSS, is like a behind-the-scenes system that helps banks and financial institutions in Nigeria move money and make sure that payments between different banks work smoothly. It acts as a central hub where all the banks come together to process things like electronic transfers, bill payments, and direct debits. NIBSS helps ensure that when you transfer money from one bank to another, or when you pay a bill online, the right amount of money goes to the right place securely and quickly. It's an essential part of how banking and payments work in Nigeria. This is the second good news we have for you about the Nigeria banking industry. Setting up the Nigeria Interbank Settlement System, NIBSS, is a commendable feat of achievement. Even the American banking industry have been unable to achieve this. Now we warn you, it goes downhill from here. Without the coming together of all the participating banks, Olamide, who banks with First Bank trying to transfer funds to Kanu, who banks with Union Bank, might have to wait days or pay a significant sum of money to make the transfer happen. So it is this NIBSS infrastructure that makes it easy and hassle-free for Olamide to transfer monies in his First Bank account to Kanu's Union Bank account. Ouch, we did miss out something. Yes, we did. It will have to cost Ola multiple fees in most Nigeria banks. Indeed, as they say, nothing is free in Freetown. Or can it be free? Can Ola make free funds transfer to Kanu? Well, yes, it can be free only if they both have bank accounts in the UK. So we circle back to the UK, where a group of banks came together to create a similar infrastructure like the NIBSS. The UK called theirs the Faster Payment Service. This was launched in 2008. Olamide can make similar transfer of up to £250,000 in a single transaction without incurring any additional fees. £250,000 is 355 million Nigerian naira using November 2023 exchange rates. Using 0.5% transfer fee charge, Olamide will have to pay First Bank 1.8 million Nigerian naira to transfer 355 million naira to Kanu's Union Bank account. Now, if the UK banks that came together to create their NIBSS system see fit to make such transfers free, why is it that their counterparts in Nigeria decided, oh no, Nigerians must pay for this service? Is it because Nigerians do not deserve such ethical considerations? Or do we take Nnamdi Kanu's words as gospel that Nigeria is a zoo and the bankers see reasons with Nnamdi Kanu? Are Nigerians not worthy of decent treatment, seamless and deductions-free banking? Please stay with us. In part 2 of our special report, we explore examples of each of these transfer fees and service charges. We provide receipts, evidences of these thieving deductions, or bank taxes as Nigerians will call it. If you are as concerned as we are, please like, share and subscribe for part 2 of this special report.